We are joined today by the Joint Managing Director and CEO Sharad Mahendra of JSW Energy and the CFO and Director of Finance Pritesh Ji as well. First of all, thank you so much for joining us here on CNBC TV18. Sir, it's the first time you're joining us, after taking charge on Feb 1st, 2024. So before, we go on to a lot of detailed questioning that we have, first up, could you articulate your vision for JSW Energy? There's been a lot of planning that's been done. You've articulated your targets in various analyst meets for 2030. Are you on track to achieve all of them? And what is it that you have planned for JSW Energy?
Yes, what you rightly said that we see that huge opportunities are there. We are seeing the way India as an economy is performing globally, one of the best performing economies. And the opportunities in terms of industrialization, manufacturing growth, which is now manufacturing driven growth, which is going to be the future. I think we see huge opportunities in the energy sector. The way the demand growth is growing, we are getting ourselves ready to contribute in this growth story of India. And just to give you an example, if we see that the demand growth when we are talking, that the power demand, peak demand, which was close to about 203 gigawatt in FY22, which reached 260 gigawatt in FY24, and which is expected to reach to a level of 335 gigawatt by FY30. So we see this as a huge opportunity, and with a special focus of the country in the renewable space, we are getting ourselves ready, and our vision is to be among the leading green energy producers in the country, and providing not only just the green energy, but a comprehensive solution to the end customers.
Sir, in the context of you talking about energy demand soaring, we are also entering a peak season in terms of demand.
Yes.
You also built up a very successful and a large war chest of almost 5,000 crore after raising funds via the recent QIP. You've articulated plans for 2030.
Regarding the QIP, which we recently raised, I think has got a tremendous response. This is the largest fundraise in more than last 10 years in the power sector, and the third largest in the history of power sector in the country. And apart from the response which we got, which is in excess of 3.2 times the response, the participation from the global majors has given us a lot of confidence that the market also sees us as an organization which delivers the promises. And as you said that we have already about a year and a half, 2 years back, we have said that to reach 20 gigawatt of generation capacity by FY30, we are absolutely on track. And if we say that we have divided that into 2 phases. Phase 1, we had said that we'll be reaching close to 10 gigawatt by FY25. We are very well on track, and we are absolutely confident that the work in progress which is there, that will be reaching the phase 1. And phase 2, reaching 20 gigawatt by FY30 with the kind of order book which we have and the readiness we have, we are quite confident that we will be accelerating that growth and will be reaching that number a few years earlier only, which will result into achieving those EBITDA numbers and PAT numbers of FY30 significantly earlier.
Would you be able to give a timeline of when you'd be able to reach it?
Understanding the local challenges, and though we have considered all the challenges which exist in executing the project, but rather than giving an exact timeline, but few years earlier, I can say that we'll be achieving that. And then we'll be visiting, we'll not be stopping there. So FY30, what we'll be reaching, we are working on that now.
First up, market expectations for that. The QIP raise that is coming in, majority of that would be going ahead and finding a valuation benchmark as far as JSW Neo, your renewable energy arm, is concerned. The structure of the QIP is such that a lot of the money, a lot of the funds is going into repaying debt, and a certain portion, a little over 600 crore, is going into JSW Neo. So can you explain the structure to us? How will the QIP proceeds be used? And FY25, after the debt repayment, what will be the interest cost savings that we see?
See, if I take a few steps back, in the few earnings conference calls, in the past, people have asked us about different optionalities, of capital raising, if at all. and we maintained one consistent stance all the time that whatever we do at the right time will be what is most value accretive for the business and for the shareholders, right? That has been our philosophy and the guiding principle, I would say. So we created an enabling structure 2 years ago by creating JSW Neo Energy and through multiple corporate actions, ensuring that all the green businesses were housed under this one entity. So we created what is called a monetization vehicle, that if and when an opportunity comes, we would have the ability to do that. However, looking at, from a relative trade-off point of view, plus another very important criteria that went behind doing a QIP rather than anything else was that in the last 2 years, we've done extensive engagement with large institutional investors. And a consistent feedback we got is that great business, great management, but very low free float, and the low liquidity is becoming a constraint. So an important criteria was also how do we get high quality blue chip institutional investors in our cap table, and QIP would give an opportunity to do that. So in sum total, we finally decided to, go ahead with QIP, and as Sharad was rightly mentioning, the response was very, very humbling indeed. The kind of response we saw from the biggest of the blue chip, global as well as local investors was to that extent.
And how does this change your balance sheet in terms of the debt figure?
So what will happen is this, that effectively, if you look at the end of December, what we had reported, we reported a net debt of 26,300 crores. And this translated from a leverage profile point of view, a net debt to TTM EBITDA of about 4.6 times and a net debt to equity of about 1.3 times. This is still very, very healthy on a sector relative basis. So an already robust capital structure will get further bolstered by having this large liquidity pile and create an additional headroom in the balance sheet to accelerate the growth plans in lines with what Sharad was just mentioning, that to prepone the 2030 targets by a few years, this liquidity will really help in.
Effectively, you've given yourself headroom of close to 20,000 crore. Yes. You have strong capacity addition plans. Yes. There are a couple of targets in the NCLT, say like the Cuddalore, close to 1200 megawatt of capacity. Would you be looking at inorganic growth plans? How serious are you, and how aggressively will you go ahead and bid for such assets?
These inorganic opportunities are a regular phenomenon now. Without naming in particular any asset, if you see that so many platforms which are there, they have a fund life and then they have the targets to exit. So we keep evaluating. We acquired, maybe not through the NCLT, but in about a year and a half back, what we did, Maitra. So similarly, which was a very attractive opportunity which we saw and we evaluated and we acquired. So similarly, our team keeps evaluating the opportunities which are there in the market, and as and when the opportunity suits, because we have to keep in mind it is everything value.
I think that makes it quite clear that the fundraise clearly targeted at quicker and more accelerated growth plans. Yes. Now the next question is, a lot of companies actually have said that they will not go ahead and do thermal capacity addition. Yeah. But in the last couple of years, there has been a change as far as the entire global outlook is concerned in terms of increased focus on thermal capacity addition. Where does the JSW Group stand currently in terms of thermal capacity?
See, first I will talk about India. As a country, you see that till about a year back, there was a number that by 2032, additional capacity of 55 gigawatt of thermal will be required to cater to the demand. Then government kept on revisiting the numbers, and they found themselves behind the curve, the way the demand growth is there. So the number got revised to 80 gigawatt, and the latest number is now that there will be a capacity addition of another 88 gigawatt in thermal space. But as I said, that for us, the core is in the renewable energy space. Of course, it doesn't mean anywhere if the opportunity is there and there is a need. So we will definitely like to be a part in this growth story. But our significant focus will be on the green energy space. Just to give you an example, that today, if we talk, including our hydro portfolio, we are at about 50-50. 50% is thermal of my total portfolio at year end, and 50% is renewable. But by year end, when FY25 the capacity additions which are happening, we will be in excess of 60% will be our renewable portfolio and 40% will be thermal. And with the plans which we have and the order book which is there in hand, this is further going to increase in excess of 2/3 to 1/3 is the benchmark which we have kept, but maybe it may be slightly more in the green space.
So FY25 and 60-40 and then maybe
Even
65-35.
yes.
Okay. Let's come closer to the next quarter. Talking about spot prices currently, hovering around 4.5 rupees a unit. You're one of the few players who actually have a significant portion of your portfolio not tied up with long-term PPAs, thereby making it possible for you to sell in the open market. So especially when you're talking about in Bharat, close to a little over 1 gigawatt of capacity is open. Would you consider going for long-term PPAs, or do you feel that spot prices from here can move higher, thereby giving you more higher returns?
So if I can give you some context to this, let's break the thermal into two buckets. One is a legacy portfolio, which is 3.1 gigawatt operational. In this, we have roughly 650 megawatt, which is untied, which is on merchant. But these are imported coal-based plants in Vijayanagar as well as in Ratnagiri. In Bharat is a new, as Sharad was saying, the new asset that came to the block. This is a 700 megawatt asset which we acquired through the IBC process. This is a pithead plant, within 25 to 50 kilometer distance of some of the richest coal deposits in the country. So it's a domestic coal-fired capacity. So 700 of N Bharat plus 650, so say roughly 1.4 gigawatt in the total 10 gigawatt that we are talking by end of March 25 is what is exposed to the merchant market. Now this 700 megawatt of the domestic coal-based merchant capacity actually is very attractively positioned in a tightening Indian demand-supply dynamic as the merchant tariffs have started inching up for the last 2 years, right? So in the near term at least, we would want to keep it open, because there's an opportunistic higher returns generating potential from this business, which the way we look at it is basically excess equity generation to grow the business for future years, right? So having said that, I should also point out that where are the PPAs for thermal coming up? So it's not only about you wanting to, it's also about smelling the coffee and what is the reality in the sector. We haven't seen any medium to long-term PPAs for the thermal space being called by the state discoms in a very long time. So as and when a suitable opportunity comes up, we will do a proper trade-off analysis, and whatever is in the best interest of the business, we will do that.
Let me pressure you a little bit to get to quantify the number. Where do you see spot prices going in from here? Number two, how do you see coal prices move? Because you do import a significant portion of coal requirements. Coal prices have been volatile. So how do you see margin trajectory also moving forward? Number one, power prices. Number two, coal prices.
So with respect to the merchant business, if you see the imported coal prices have actually corrected, right? So if you look at the seaborne thermal coal prices, look at a representative index like the API 4, in the last, compared to 1 year ago, the spot prices today are about 30 to 40% lower, right? So there's been a sharp fall in the imported thermal coal prices in the seaborne markets. And that is reflected on a relative basis with what is happening to the average RTC merchant prices in the country, right? Just to quantify this in terms of numbers, if you look at for the last financial year, which ended in March 23, the average merchant prices on a round-the-clock basis for the year as a whole was 5.95 rupees per kWh, right? That was because the spot thermal coal prices were very high in that year, and so a lot of imported coal-based plants which feed into the merchant market, because the variable costs were up, the tariffs had gone up. Right. However, the spot thermal coal prices are down sharply from then, and that is reflected with, I think the March 24 average is about 5.2 to 5.3 in that range. So while the headline numbers have corrected by say 70 to 80 paise, but the dark spread in terms of the tariff minus the fuel price is actually higher on a YOY basis. So I would say margins probably is a bit misnomer in this business, because you have to look at the absolute delta contribution, and that is what makes more sense, and that continues to be healthier. To the specific question that you asked, what do we see it from a trend point of view? As Sharad was saying earlier, that if the peak demand growth is continuing to inch up at say a 6 to 7% per annum rate, and the peak deficit is going to widen, it is natural to expect that the contributions should at least remain healthy on a conservative basis, if not higher than here. Yeah.
So you're expecting the dark spreads to inch up higher. Last question to both of you. The JSW Group has significant capex plans, and you've stated your intention, number one, to participate in battery energy storage supply projects, and number two, in green hydrogen projects. Can you give us a sense of timelines? Can you give us a sense of what's been done so far? And if you could give us a sense of how the unit economics could work.
See, battery storage, I'll talk first. Before going to the group requirement, we have already acquired a gigawatt-hour storage project, which we are now going to set up at very attractive rates. And going forward, we see that battery storage is going to play a key role because battery storage and the water battery, or like the pump storage. See, pump storage also is going to be, these two are going to play a few very, very significant role in the overall power demand and consumption in the country going forward. But PSP, with a long gestation period of maybe 4 to 5 years, 6 years, till now with battery prices also started moderating, I think battery storage is going to play a very significant role. And that is now visible also in the market. Apart from just pure storage, the hybrid models which have come, which was wind and solar hybrid, now it is the FDRE which has come. And we participated, and we were successful in getting the first FDRE bid. We won at a good price. Is again a mix of solar, wind and battery storage. Right. So apart from round-the-clock green power which came up, this is a much, much more demanding thing that we have to understand. Hourly demand pattern which any DISCOM, any state is looking for. So that is how the project needs a lot of designing also in this. It is just not pure capacity. So that is where we consider ourselves as we have created a differentiator in providing the most optimum, best cost-effective solution that resulted in that we winning the bid. Regarding our captive requirements, also round-the-clock power requirement is there, because our largest group company, JSW Steel, is looking towards moving towards green steel. Right. And for that, round-the-clock power, which is a requirement, is there. So initially, we have already, as a pilot, we have already started working on a 25 megawatt green hydrogen project, which is 3,800 tons per annum. To start as it is a learning for both for us as well as JSW Steel. And going forward, once the economics allow to scale up, we are confident that we are ready to take it to a level, because this is going to be the need. And in addition to that, we are already in discussion to finalize a round-the-clock power solution to JSW Steel with a mix of pump storage, wind and solar, around-the-clock green power. These are the requirements which are there. So we are very, very actively working on, and hydrogen definitely, with this 3,800 tons per annum of hydrogen and green hydrogen and green oxygen of almost 30,000 tons. This is going to play a significant role in our learning and moving towards the green steel initiative of our group company.
Before you pitch in, I also want to understand that any projects that JSW Energy does for JSW Steel or any other group companies, will the IRR be at the same level of third-party contracts that you have, or will you look at a slightly more discounted rate?
So, any transaction between two companies within the group have to be on arm's length basis, given that these are related party transactions. So typically what is going to happen is this, that the procuring entity is going to call for a tender from multiple players, and this is how, for example, in the current batch of 2.6 gigawatt of organic projects in the pipeline to get to 10 gigawatt, roughly 1 gigawatt is what we are building for JSW Steel. The same process was followed. They called for a tender, we participated, others also participated. But if you look at JSW Energy's USP, typically, our capex per megawatt is one of the lowest in the sector. Our OPEX per megawatt is one of the lowest in the sector. We enjoy one of the highest credit ratings in the private sector, and because of which our financing cost is one of the most competitive. Because of all these three things, we tend to be one of the most competitive in terms of being able to offer competitively priced power to any of our procurers, right? So hence, in a competitive tender, a competitive price is discovered, and that is how the arm's length, pricing gets done. Typically, you would expect that compared to a utility scale procurer, which could be a sovereign counterparty, the tariff for JSW Steel will be higher than that because it is not a sovereign credit rating, So it's like the benchmark for JSW Steel tariff should be what is generally being seen in what is called the CNI space, for the commercial and industrial consumer. That's the right metric compared to, what a discom is going to be buying.
And to add to what Vinay said, in fact, in past we have demonstrated also the thermal PPAs what we have for so many years. It is a two-part tariff. There the CNI space is not very common in the thermal space. Right. So exactly the CERC norms were followed in the PPA, and the returns also as defined, any two-part tariff which is defined as per the CERC norm is on the basis of that the PPA, current PPA also exists.
Yeah.
Those are all the questions from my end this time around. We'll keep asking you a lot of questions at the end of every quarter as well. Sure, Thank you so much for it.
Thank you.
Thank you very much, Vivek.